Hey everyone, welcome. Today, we're going to talk about one of the most powerful yet simple tools in a trader's toolbox, the trend line. I want you to think of it like this. It's basically a roadmap for the market. It doesn't just show you where the price has been, it gives you some incredible clues about where it might be heading. So yeah, let's jump right in. So can a simple line really reveal the market's next move? You might think, no way, it can't be that easy. But honestly, the answer is a huge yes. A good trend line, one that you draw correctly, can give you these amazing visual hints about market momentum, about where things might just turn around. It's all about learning how to read the story that the chart is trying to tell you. Okay, so let's get right down to it. What is a trend line? Well, sticking with our roadmap idea, if the market's on a journey, the trend line is the map you draw right on top of your chart. It helps you see, the path of least resistance. It shows you which way the traffic is flowing. And really, at its heart, a trend line is just so simple. We're not doing any complicated calculus here, right? All we're doing is connecting the dots. We're finding those key high points or those key low points and just drawing a line between them. That's it. And by doing that, we start to see the bigger picture, the underlying current of the market. But wait, before you can even think about drawing a line, you gotta know which way the road is pointing. And in the market, there are really only two main directions we care about: up and down. So let's break down what each of those looks like. So an uptrend, think of it like you're climbing a staircase. The price goes up, making a new high, then it pulls back a little, but not all the way down. That's your higher low. And then boom, it pushes up to an even higher high. See? Higher highs, higher lows. A downtrend is just the reverse. It's like walking down that same staircase. You get lower lows and lower highs. Spotting this pattern, that is step number one. It's absolutely crucial. Alright, so we know how to spot the trend now for the fun part. Let's actually draw these lines. And a really good way to think about this is like you're drawing the floors and the ceilings that the price is bouncing between. So, when we're in an uptrend, what do? We look at those higher lows, the bottom of each little pullback, and we connect them. This line becomes our support line. It's like a floor that the price keeps bouncing off of as it climbs higher and higher. And that is a key area, because traders are watching that floor, looking for those bounces as a sign of strength, a potential time to buy. And you guessed it, for a downtrend, we do the exact opposite. We find those lower highs, the peaks, and we connect them. This creates a resistance line. It's like a ceiling that the price keeps running up to, hitting its head, and falling back down. And that tells traders, hey, there's weakness here, making it a potential spot to look for selling opportunities. Okay, so how do we actually do this? Let's break it down into 4 simple steps. Step 1, figure out the trend. Are we going up or down? Easy enough. Step 2, find your points. You need at least 2 major low points for an uptrend or 2 major high points for a downtrend. Step 3, connect the dots. Just draw a straight line. But listen up, because step 4 is where the magic happens. It's confirmation. See, a line with 2 points is okay, but when the price comes back and touches that line a 3rd time and reacts, whoa, that's when your line goes from just a guess to a seriously powerful, validated tool that you absolutely have to pay attention to. Okay, so you've got the basics down. You can draw a line, but what's the difference between a kind of meh trend line and a really good one? Well, let me give you a few pro tips that are going to make your chart analysis way more powerful. This first one, this is the golden rule. Seriously, you have to think of a trend line as a zone, not a laser-thin line. The market is messy, it's not a perfect science. Price is almost never going to come down, kiss your line perfectly, and reverse. It's going to poke through a little or maybe not quite reach it. That's totally normal. So think of it like a thick crayon line, not a pen line. Don't let a little imperfection shake you out of a good read. Alright, here are 3 more big ones. First, the more touches, the stronger the line. It just makes sense, right? A line that's only been tested twice is interesting, but a line that's been hit 3, 4, 5 times and held, that's a line the market is clearly paying attention to. Second, watch that angle. If you draw a line that's super steep, like climbing Mount Everest, it's probably not going to last. Those kinds of moves just run out of steam. They're unreliable. And finally, and this one is a game changer, look for confluence. That's a fancy word for when your trend line lines up with something else, like a classic horizontal support or resistance level. When those 2 things intersect at the same spot, that area becomes a super-powered zone where you should really expect a reaction. So we've spent all this time learning how to draw lines that the market respects, that act as floors and ceilings. But you know what's even more interesting? What happens when the market suddenly stops respecting them? Yeah, when the lines break. This is where the action is. Imagine the price is in a downtrend, right? It keeps hitting that resistance ceiling. Tap, tap, tap. And then all of a sudden, bam, it smashes right through it. That's what we call a breakout, and it's a huge potential signal. It tells us the sellers might be running out of gas, and the buyers are stepping in to take control. It could be the very start of a brand new uptrend. And on the flip side, we have a breakdown. So picture this. The price is in a nice uptrend, bouncing happily along that support floor we drew. Bounce, bounce, and then, whoosh, it falls right through the floor. That's a breakdown. It's a major warning sign that the support has failed, the buyers have disappeared, and the whole trend could be about to reverse and head down. So the big takeaway here is pretty clear, right? Learning to draw and watch these lines is a fundamental skill. It's how you start reading the market's story. And when one of those lines breaks, it can signal a massive shift in the plot. But that leads us to the million-dollar question, doesn't it? When a line breaks, is it for real, or is it just a fake out, a trap to catch you on the wrong side? Figuring that out is key, and it's something we'll get into next time. Thanks for joining me.